share coming. All right. Let's get cracking here. So non-farm payroll hit. Markets kind of love the fact that the U.S. Labor numbers were softer. Let's take a quick peek at that. I think the forecast was in the 50s, came in negative, or no, 80. 85K came in negative 23, almost 100,000 job miss. The revision from 57 down to 20. Unemployment rate drops, which really is a story of participation more than anything else. Also, average hourly earnings going down. So, less jobs available, tighter labor market, unemployment rates down because participation is decreasing or people are stopping looking for jobs. And then we're also making less money. So now that does, again, just put additional pressure on the Fed because we've been not talking about labor for months because the prints have been okay, right? You go back a few months here, 64K, we're like, okay, but that 119, 130, 178, 115, 172, I mean, that put the labor market on the back burner. Here we are now front and center. So I'm curious if there is like an additional pivot towards, well, now the Fed can't do anything. They can't raise because they do that, it's going to crush labor market. If they raise, it's going to be, is it necessary to raise in this economy? I mean, I don't know. It could be like the economy slipping, labor market slipping. The unemployment rate seems artificially low to me. I get it. Like if people, from survey wise are not looking for jobs or participation is lower, but I feel like, we do have a true gig economy that's not reflected in this BLS data. So I get there's like insulation there, but for average hourly earnings to be showing that people are making less money, meanwhile inflation is running, hot enough, it's sticky enough. Anyway, markets don't seem to care. I mean, here we are at 7740. It was a big spike to the upside. It's kind of faded. I think I was looking at price this morning around 7720. Here we are at 7740. Opening bell in about 20 minutes. Levels I'm watching for 7,800 on the upside, and I'm watching for 7,650 or lower on the downside. So couple ways I'm looking to build out a trade this morning. If you're looking at an iron condor for daily profit play, I'm looking at 7,600 and 7,810. I know those are way far out of the way. Okay. But if we have a lot of direction today, whether it's up direction or down direction, if I get filled here, that to me would be, if I get filled, give me $1.50 to $2. Let me play defense. I would think I could have enough comfort or enough breathing room to also play defense and go higher or lower for my defense and still have these trades survive the day. The issue right now is it's a little bit higher on the call side and it's way lower on the put side. But as far as what I'm reading today on this gamma profile, we have a net call open interest. We have the highest call open interest. We have the largest net call volume. We have high call volume. We have a max pain structure up here at 7,800. So could this market try to find a way to rally 50, 60 points today? I mean, look, we can get to 7,800 and still fall on the close, but the plus minus on the day is 46.63, which is a little bit higher. I actually measured this morning at 48, which is what I put in my expected move box here. 48.03 is what I read this morning. So I was ballparking this, so I can change these lines once we go live with our open bell. But I'm using 48.03. Brokers this morning, I think we have like TradeStation at 44. Tasty Trades around 42 or 43. Thinkorswim's at like 40 or 41. So I'm going to use the higher of the bunch. Tanuki Trade Smart Range is 48.03. Okay. So that still keeps us relatively contained for the day. But if we have if we just have like directional volatility, maybe there's not like movement that gets us aggressively lower or aggressively higher. We don't necessarily break the expected move box today, but if we have enough volatility, I'm looking for a trade to get us filled. So I am trying to maybe play a trade like this from 78 into the center price down to about 76.50. Have this be like my iron butterfly today. So this would be a double up iron butterfly. I'm also looking at let me put this trade back on for this morning. So we can do this with the global hour, so I can put the trade in now. SPX August 7th. So I'm looking at, we're trading around like 30 or 40. So I'm looking at a 30. So 77.30, I'm selling the call and the put, and I'm going 80 wide, and I'm going 80 wide. Okay, I'll put this in for double ups. This is the same type of trade I did yesterday. I'm not taking the trade for $36. I'm taking it for $70 to $75 credit. If that gets filled, we're going to have some direction pressing 7,800 or direction pressing 7,650. But if this gets filled, I'm risking $500 to make up to $7,500. Now, that $7,500 is if price comes back and settles somewhere close to 7,730. It'd have to be spot on. But if we're below 7,805, I make money. Every point's $100. If I'm above 7,655, every point above that is $100. So, I mean, if we notch 100+% gain, this one could pay very, very well. Okay, so that'll be a trade for double ups this morning. Pending order. SPX for today, 8/7 expiration. So I'll make sure I type this one in correctly. Yesterday, again, I did all calls, and I need 2 calls, 2 puts. So that's my fault. So I'll type this in very slowly. 7730 call, 7810 call, 7730 put, and then 7650 put. $75 credit, $5 max risk. Price needs to test the buy strikes for a fill, but this is a very low risk to high reward setup. Okay. So I've got that one pending for SPX on double ups, and then for daily profit play. So I did the old Batman trade, my broken wing butterfly Batman trade. If you like this trade, here are the legs. There is risk okay? I got filled this morning at 25 cents and 15 cents. You can possibly play with the strikes a little bit, but what I'm trying to build out here is for basically $40 to $45, I can have up to a $1,500 or a $2,000 profit trap. So it's to see, will price come into one of those profit trap zones? Okay. Will it come into one of those profit trap zones and offer even a $150 to $200 at all? So if price is going to creep up, oops, let me use a different color. If price is going to creep up to 7,800, I want to have a profit trap hanging out right there. If price is going to fall down to 7,650 or lower, I mean, I think I put a pin price around 7,600. Why did I choose 7,600? Because look at our gap from Monday to Tuesday. I don't know if this happens today, okay? But do we think that in a low liquid, inefficient move from Monday, Tuesday, that this market may be interested in finding that area? Yes or no? Remember that the previous high was 76.20. So I do wonder if the market is going to try to backfill that a little bit. May not be today, but if we get up towards these highs, stall, come back down, more indecision, I mean, we could still have a bit of a pullback to test that level. So what I'm going to look for is, can we come into this like 7630 to 7600 zone? And I want to put a butterfly or broken wing butterfly in the area. Broken wing because it's going to be a lower debit and have a decent profit trap. So I think the put side is 20 wide and the call side is 15 wide. All right. Now I think on the call side it changed a little bit. I got in this morning for 15 cents on the put side and 25 cents on the call side, and this is 20 wide. This is 15 wide. So if you want that trade, it's going to be a bit more expensive because I've been in it now for about 45 minutes. This call side is it's not that, it's 30 to 35 cents. But that also means the put side might be cheaper. So net, it might be 40 to 50 bucks. You're just going to test the market today. I could lose 50 bucks. How do I make it up? Get filled on a daily profit play, get filled on an iron condor for daily profit play, look at a butterfly spread as price, evolves through the morning, easily make up 50 bucks. Okay. If I'm right and price is drifting one way or the other, this little profit trap of $15 will hopefully offer $100, $125, $150 I can manage through the morning, and I let the other one close out for that small debit loss. So if between the two of them I can close out for profit, great. So it's one to kind of play it a little bit more conservative and let the profit trap kick in at those levels I think that price may find. And then if I'm looking at an iron condor, I'll get those levels in as well. I don't want the strikes to overlap. So I'm putting in a broken wing butterfly Batman trade. Okay, I don't want to confuse anybody. It's 2 broken wing butterfly trades. Note, if price doesn't get close to these areas, so about 76.20 or 7,800, these trades will be low debit losses. So if you don't want to test the market for like $40, $50, then don't take the trade, because realistically it's a pretty low probability trade. Okay. But for a low probability trade, cost me $40, I could have hundreds of dollars of profit. And if things get like, really decent towards later in the day at like 2 p.m. Eastern time, 3 p.m. Eastern time, there's $1,500 in a profit trap on the call side, and there's $2,000 in a profit trap on the put side. That's if we have any direction. Okay. Yeah, it's more like if Batman had a dent in his head, because it's going to look something like this. So if we have a big dead zone, okay, you'd have the Batman trade that would be this. Does that make sense? So from a risk graph, I could still lose money. Okay, I could lose money. This is my max loss. My max loss if price goes too high and too low, but we'd have to be probably less than like 75.80 here. And we'd have to be greater than 78. I think 78 like 15 here. Well, no, if we took on a risk, I think we'd have to be higher than like 78, probably like 78.20. So there's a small debit of, let's say, 40 cents, give or take. So there's a big dead zone, but if I find a butterfly that I like today, I can sprinkle those in, and I can, put in another profit trap to offset that. Okay, but this is just to test the perimeters of where I think prices could go today. All right, so I'll type those in. Here they come. SPX 8/7 expiration. So on the call side, it was a buy 7790, 7805, and 7835. That was for 25 cents debit. That's not max risk, by the way. If price were to blow through, anything above 78.20 would be your risk. Okay, so I do have some risk on that trade. It could be up to like $1,500. But if price is going that way, it should offer us a profit trap to manage before the risk becomes a problem. If I was only 5 wide broken wing, we'd see 0 bonus profit. We'd just immediately see risk, and we could tighten it up. But because I'm going 15 wide and then 30 wide, it does take some extra risk to the upside. But it'd be like a 1% chance of that happening. So I'd manage the bonus profit before it became an issue. SPX 8/7 expiration to the put side. That is a buy 7620, 7600, and 7570 for a 15-cent debit. If price is drifting towards the sell strikes, we should see a profit trap that we can manage. Anything over, I'd say like $150 to $200, I'll likely look to protect. Okay, So if I mean those two trades, if one of them is offering a bonus profit of like $150, $175, $200, I'll just take the profit. I'll let the other one just sit. It can be worthless at the end of the day, but I'll let it do its thing. Okay. I do also have some management stuff today that I want to take care of. I know we have some news breakers out today. Some are going to be losses. I mean, like Microsoft and Apple. The two-way trade we won on Apple, the pin and win trade on Microsoft continues to go higher. Apple did not fill the gap. Meta was a good win yesterday. We took over 100% out of Meta. Today it would be even better if you did hang on to it. We just had a lot of volatility. I mentioned we had like a $6.40 move, and I think I saw price drop over 10. I'm like, well, I still want to take 100% of this trade, so I did. But today I think Meta is going to be up over 200% if you hung on to it. Yeah, but Procter Gamble, Intel. What did we do on Intel? Let me check. So we have Apple. This is going to be a loss. Trying to think what the expected move was that we had on Apple. I think I put it in the Telegram. Like, where's our break even at for Apple? We should have We should have a full winner on SpaceX today. Let's see your Apple. Wait and see if the gap fills. I'm going to see where those break even levels are at. Amazon was a winner. Okay, so 316 and 346. We actually might be able to carve out a break even or better on Apple. If we're above 316 today, I think Apple is gapping higher a little bit. Fudge. All right, let me set a chart line here at 316. And even if we close it out for a partial loss, let's see what Apple can give us. If Apple can try to find a move up today, let's see if we have any gamma on Apple. Yeah, I mean 310. All right, we'll see what happens. If there's like a 315 to 320 push today, let me set a chart alarm around like 316 or 320. So that is 316 and change. I'll set a chart alarm at 320. Otherwise, it's already near max risk. What are the? I mean, there's not. You just have to close them today. Don't let there be any assignment risk because you have a buy call and a sell call, right? And so this week the sell call expires, but the buy call has made little to no. Well, the sell call expires, we would be in profit there because that's the sell. But I don't want to let the buy call linger because if I sell a call here, make money, and the buy call just, I mean, if price goes down or goes sideways, the buy call is worthless, right? So I take them together, close them together. Calendar spreads are usually very low risk. I mean, it like our Apple trade was like 45 cents, and it's a Friday to Monday. So anyway, I mean, I'm fine if we take a couple small losses along the way. The nice thing is if we stack up some winners on those calendar spreads, those can be 100 to 200% returns. So it doesn't take much to get net profits out of doing some calendar spreads. Prices moved on daily profit play. Well, we're at 34 right now. We have HVL. Let me go back to SPX here. HVL is 7715. I mean, we have a couple of potential candidates for pinning today. 7,700, 7,750. If the market's going to be just chill today, I did see a shift down. Let me get a daily profit play in as well. So I'll go SPX for today. So I'm looking at. So that butterfly kicks in. I'm going to go 78 by 78.20 because I do have some defense there. If I sell the 78, that should be, I mean, there should be a freaking bid price there. That's weird. 78 by 78.20. And I'm going to go down here towards, so I've got that 20 wide profit trap. I will try for I mean, these are really low deltas. I'm going to go 05 by 85. and see if this will, if this gives me like $1.50 to $2, I'll take the trade. So this is going to be an iron condor for daily profit play. 7,800, 7,820, 7,605, 7,585. Also, I have a profit trap that would kick in from 90 to 7,800. So if that's my line in the sand, I would essentially have like my risk starts at 7,800, but I'd have a $15 buffer because of that bonus broken wing butterfly. So I'll try to get this in for $2 credit. Sell buy for $2 credit. All right, so this will go into daily profit play as well. So 7,800 and 7,600, which I know is wide. I'm not playing like, 10, 15 deltas. I'm going a little bit further out. Here's my play. Eight, 7 expiration. Okay, trades in. Expected box. Yep. Randy, you are very consistent asking that question. I'm using 48.03 today. I pulled that from Tanuki Trade Smart Range. So it is at 46.35, which is still higher than my pre-market and end of day prep. So this is 44.31, 37.36. Tasty trade for today is 41.85. So I'm going to use I have 48 because I saw this morning. This smart range initially was 48.05. So I pulled that number. Now it's 46.35. You have your 44.31. I like to use the higher of the bunch. Okay. So prices should, and here's another way we can play this. Let's get the exact numbers today. Okay. So there you go. Your exact numbers, 7783 and 7661. If we stay inside that box today, what I'm going to look for is maybe we can get price. Give me $3, right? Risk 2 to make 3. See if we do get a fill there, or get a 1-to-1. If we get filled for 250 to make 250, if price test the highs or the box, let's see if we stay in that level. I like to just make it where it's like I'll just risk a little bit less. I talked about this since the loss on Tuesday with that inefficient day. I'm like, I might as well spend more time recovering with high reward, low risk. So I think to me that's a slightly better plan. So I'm going to take a 7785. I'm going to go 5 wide on this one, and I'm just going to take the exact box. So 7785. Fudge muffin. Let me try. I'll do. Let me try 85 by 95. So 10 wide. Make sure this doesn't overlap. So there's 10 wide, but I want like $7 or $8 out of this trade if I can get it. That might be asking a lot, but I want the trade to be low risk. So that's 85. Then the bottom was 7761. So I can go 65 by 55. Give me, I can play it here and grab $1.55 to start and then put a second trade in at like $8 or $9. So at least I have some skin in the game for the day. But I'm going to be greedy here and say, give me like 750. So I'm risking 250 to make 750. And that would be staying inside of the expected move box. So I'll throw this in for daily profit play. Okay. So optional DPP around the exact expected move box. 8-7 expiration. 7785. 7795. 7665, 7655. Okay. So I mean, if, like I said, if you want that trade, it's still offering like $1.40. It's a bit more aggressive. It's right at the box high, box low. Okay. But it's not, I mean, if we pulled in that trade, we'd be risking 850. So I pull in $1.50, risking 850. We'd get about a 17.6% return on risk. That's okay. It's not great. So give me more credit. And hopefully we can sprinkle in some, broken wing bonus profit or get filled on the $2 wide or the $2 credit that's 20 wide at a slightly higher level. The Batman trades, the Batman trade is not a double up, it's a daily profit play because it's not a lower risk trade. The Batman trade is a small debit, but it does have like $1,500 of risk if price is wrong. So it's kind of like a 1-to-1. But yeah, it's not a double ups. The double ups is an iron butterfly. That's what I put in this morning. So I put it in for $75 credit. Something spiking in the market. We've only moved up a couple of points. So live price. Let me get a read on futures this morning too. So we come back down to the daily VWAP. Nasdaq futures maybe the same, maybe bouncing off this. So potentially a future scalp. We, maybe bounce off the daily VWAP, maybe bounce off the daily VWAP. We'll see if that keeps us postured for the day. Anything change here? Nope. We're down to 40 points on the expected move. Okay. So if you look at my gamma profile, can you see like 7,800? I mean, there's a lot of activity up here that I would say if we're going to get there, okay, fine. It still exceeds the expected move, but if we get there, I'd look to see if there's a reaction from it. We get to 78, we react off of it. If we come down towards 77.15 or 7,700, those are a couple of levels. If we have support, 77.15, 7,700. If we find support, that's what I'm looking for. If we breach 77, maybe we're falling down. That's why I want to put in some of those, traps. And if we have volatility there, I think we can get filled in daily profit play for $2, which is all the way down to 7,600. Okay. All right. Let's talk newsbreakers for a moment. I know we have some trades to manage. So there's not much to do other than close them. Okay. So like Apple is down. So my max risk here is about $60. I'm down $48. We're trading at 313. Look, Apple, if it's above 316, should be break even. So for me right now, I mean, I can either one, close it out, give myself no chance, or basically risk an extra $12 and see maybe this thing can fight back and give me a break even trade. So I'm going to close it by the end of the day. But if this thing can get break even or better, I'd be really happy with that. So let's see. I mean, it's trading for a 6-cent credit. I'd love to see Apple push up to like 315 or 317.50 today if possible, and we might actually squeak out a tiny little break even. Otherwise, I'll close it before the end of the day. It's going to be likely, for me, it's going to be like a 30. It'll be like zero credit, right? I get a 30-cent debit. I close it for like 1 cent credit if I'm lucky. Okay, so we'll see. That's Apple. What are the other zero DTs that we have? So Apple, Microsoft. This one maxes out at $90. I don't know why it's showing negative 150. This one I could probably just close it out. Let me see what this is trading for right now. Microsoft showing us, so that's why it's the bid ask is why. This should be like a credit for me. I'm going to try to get out of here for like a 10-cent credit, which I doubt is going to do, but I'll try. So no credit. It can also just expire worthless. 5 cents credit not working. All right, Microsoft I closed for 1 cent credit. That is a loss of $88 because I did two contracts. So $88 on Microsoft taking the loss. I'll put this in for newsbreakers. Microsoft closing for 1 cent credit, 44-cent loss per contract. Apple holding to see if Apple will reach 316 or higher today for a break-even result. Otherwise, I'll close for small credit. SpaceX should have a full winner today. SpaceX is actually showing a tiny bit of profit trap. If we can close this out for a little extra credit, let's close that one down for a winner. I'm just going to close it now if we can get an extra profit here. Can I get 1 cent credit on SpaceX? I'm going to try for 5, I guess. Give me a little bonus profit if I can. Probably not going to give it to me. So no extra credit there. No extra credit there. All right, I'll try to close it for like a 1 cent debit. 1 cent debit. It should be a full profit. All right, I'm going to let SpaceX just expire. SpaceX should be closing for full winner of 51 cent profit. If price falls to 104 or lower, profit trap to manage, which is unlikely. I mean, we're trading at 120 today. I don't think we're falling to $100 today. That would be, there's like a 1% chance that happens. So most likely we're just going to keep our full profit on the broken wing. Oh crap, hang on. My dog's going to throw up. Sweet. Don't do it. You're good. You're good. Come on, breathe, buddy. Come on. Ugh. Jeez. Keep breathing, dude. Disgusting creature. Survive. All right, good times. Come on, get out of there, dude. French Bulldogs. Who needs them? Adorable dogs. They love the people, but they are a nightmare. At least he's healthy. If anybody knows what I'm talking about, like they've got back problems, they have hip problems. He just has a crazy sensitive stomach and he can barely breathe. All right. That's correct, Curtis. Yeah. ChrisPulverPub@gmail.com. All right. So let's keep going here. SpaceX should be a good winner. And let's see here. GILD. This was a Newsbreakers trade. Right now, we are up around 40% on GILD. How did I do? Oh, I see. Okay. So we're looking at mostly let's just take the profit here. Let's check it really quickly. We just did a bull call spread. Now we can hang out and just like hope it goes up and gives us the full dollar profit. It was a 1-to-1, right? We got in for 50 cents. So, I mean, we're up nearly max profit. Um, no, it's actually partial. Let's just take the profit here. I'm going to grab the profit and get out of here. Okay, because if this slips below one, let's see. If we're back below 131.50, well, we got a dollar. We got some wiggle room here. All right, as long as price stays above 131.50, we don't have any risk. Let's give Gilead a chance just to stay bullish on the day. If we're above one, let's see if we go higher. So if we go 133 versus falling back to like 131.50, what I'm trying to do is not get a loss in this one. That should be worth about $100 if I'm right. Okay, so I'm going to try to see this one will pop up longer. If we go up, I mean, if we get to 133 or 133 and change, this is worth $100 by the end of the day if we stay above 132. All right, so GILD, GILD is Gilead Sciences. If we have if price is greater than 132, we can have a full 100% winner. So I'm going to hang on to that a little bit longer. And that's it. So I put in some shorter term ratio spreads, August 21st on Marvell. If that's right, I want to take that bonus credit. Okay, good. AVGO ratio spread looking good for full profit. Going back to Project Options Edge, we talked about this week some of those Marvell, CVX, Microsoft, XLE, XOM, AVGO. I mean, SPY I think is going to be fine. I mean, I just want to see, what trades do I have that are showing like 90+% profit? So I mentioned this before. If I go to my open percentages, anything that's over 100%, I should just start looking to protect profit. Like Marvell's over 100%. I mean, if they fill, but anything over 90+% for capital efficiency sake, like closing out Microsoft with a 96.5% max credit, closing out CVX for 94% max credit, closing out XLE for 92, almost 93% max credit. Like those trades with time, I don't need to wait on XLE to, December when the reality is I'm up 93% of the profit right now. It's going to make me an extra $15 if I wait until December. So trades like that, I mean, it's naked puts. They're all naked puts. So I get a decent amount of buying power back on that combination trade. So I'll look to close this out. Look for those updates in Project Options Edge. Okay. All right. Let me get some trades organized for today. Also, I'm thinking of going. There we go. So Gilead's looking a little bit better now. Let's go to GDX. Oh, fudge me, man. So I think I'm going to do a zebra trade on GDX. I've got to look at how much this one costs. GDX. I can go out to December 2027. I mean, it cost me a couple grand. So if I buy and then sell, so buy the 70, sell the 55. So it's going to cost me about $3,300, but that's like a synthetic long that's capped risk defined. Let me build this one out. This is a zebra trade. 133 on Gilead. That's good. We should get hopefully a full there. Let's go GDX. What I'm trying to do is build a trade out that's not crazy expensive for like all of my accounts. Like I've got to be, I mean, I've IRA accounts, and so I'm very picky on like when I allocate, naked puts. It's like it's usually index related because that ties up so much capital. So if I look at the option chain, what was the one that I selected here? If I went out to December of 2027, December 2027. Delta wise, I'm looking around the 70 delta. So I'm seeing a 78 buy. So if I buy the 78 and I sell the 97, I'll do this. I'll sell the 95. Doesn't make it much cheaper, really. We'll try the 98. All right. So buy 2 and sell 1. This is a zebra. So I have a break even here around 96. It's capped at a $3,400 loss. If I think that we're going to have an issue, where's my break even price? 95 is my break even. I guess it's just cheaper to do like a credit spread. It's just not going to be a lot of premium. Let me craft this up differently. I mean, we're just off to the races, right? I mean, GDX lows. GDX is already up 29.6% versus spot price gold. I mean, it's looking good. It's made a quick comeback. This is up 10%. I mean, so we have a 3 times move on gold miners, which is pretty impressive. Flashpoints out. Okay. Flashpoints out. Market is chop city right now. How's our gamma profile looking? 7750, 7700. Kind of trading right in the middle. I want to see if the day just kind of evolves. I mean, this one right now is like my front runner candidate, but there's a lot of potential where it's like, okay, we're getting here, here, here. I don't want to just throw 3 butterflies at it. Yeah, that's what I'm gonna look at, Mike. I'm gonna look at like a wide. So I would do margin accounts. I already did it. Margin accounts. I did naked puts. I did ratio spreads. So Project Options Edge. You saw that trade this week. For my IRA accounts, I want to. I don't know if it's going to be worth a ton, but I'll go GDX. Sell some puts at like $70. So it's going to tie up some capital there, right? That's what I was trying to avoid, is just tying up all the capital. So let's go January 2028. I mean, it's not awful. If I sell a 70 put, get $500 for it. So it ties up some capital. Maybe I could do like a 75 by 70. That's not too bad. I mean, lower my cost basis by another like $9.50. That's not bad at all. 80 by this is like not bad. So this lowers the delta a lot. This brings my cost basis even lower. This would be a break even price of like 57 and change. So if I did this for an IRA account, it's going to tie up like almost $6,000. But yeah, $6,700. But is it worth it for a gold trade? Yes, I think it is. If I did the 5, it's like I want to be long, right? Like I want to be. I mean, I have shares, so it's like I just want to be long gold. I guess maybe that's what I do instead. Just buy shares. I'll just dollar cost average. There's more money to be made here. Think if I buy and it goes up, that way there's no time sensitivity. So I buy a chunk, buy a chunk, buy a chunk, establish another dollar cost average. See what this thing does. So if I throw a couple $1,000 at it, I'll probably just do that. So okay. Let me check on one account. So CEF, we're getting some love on gold. PHYS, we're getting some love on gold. GLD, I've got some shares. SLV, cheaper ratio spreads. These should all be looking pretty good as well. This bull call spreads up $650. So there's exposure, but it's like if we're just getting back into like gold and silver looking more attractive, then I think just buying shares is better. So I think I'm going to buy some shares of GDX and dollar cost average into it. So I'll probably buy maybe 5K worth, maybe $5,000 or $10,000 worth. So if I buy at market, let's see if we pull back. Maybe we pull back into like a gap area. So area 1, area 2, and then lows area 3. If I don't get filled on area 2 and 3, and it just runs up here and runs up here, like I'm looking for a 30+% on that investment. So let's try to make it worth our while. So I'll probably put like 2K into this one, maybe 2,500 and 2,500, something like that. All right. So look at those levels. So basically 90 and change. And then maybe 80, nice round number, just above $80. And then the lows are just above 60. That's 69. So I'll just put 70 and change. All right, I'll get those levels in. And I realize, like, as soon as I buy it, if I buy shares right now, it's probably pulling back. But this is like dip the toe in the water, have the exposure. If it goes up farther and then pulls back, that's okay. But the goal is, are we carving out, a decent size wedge break here for gold to, break convincingly? So if it breaks convincingly, break, retest, and then head higher. Okay. And if it doesn't pull back, I want to make sure I'm at least in that trade. All right. Okay. So I'll do that here. Let me get my IRA accounts, grab some. Actually, I'll just do this. I'm just going to find the shares where at like 90.50. We go $2,500. So I can buy 27 shares. I'm just going to go long on everybody's account. So GDX long 27 shares. Let's fire this puppy up. Okay. Just going to dip the toe in. I'll get some more dollar cost averaging levels in. I think we still get a pullback, but that's okay. I'll scale into it. I want that accumulation. All right. So I'm just going to get these all filled. Where's our SPX at right now? I mean, you can. I'm not flaunting anything. I'm just taking the trade. You want to buy GDX with me? Buy GDX with me. I don't care. This just isn't a service trade because I'm just buying shares. But take the shares. I don't care. I've been talking about buying gold for like literally 6 months. It's just like now they're starting to go up. It's like all my option trades are looking better. All my ratio spreads are looking better. Now I want to get a little bit more directionally long and have some additional exposure, not just option trades that I've been patiently waiting for. Also, good point, Russ. All right. Okay. One more here. Shares 27. All right. Filled. Okay. Let's go into my think of some webs. So definitely not something I do all the time, which is buy shares and throw it in for every account. So I clearly have to like it that much. All right, let's go GDX. And I'm not saying this is a good entry. $90 is not a good entry. It's a terrible entry. But where do I think that we're going? I think if this is carving out a bottom like so, I mean, if I don't get in and this keeps running, I'll be a little bit annoyed, right? If it immediately pulls back and tries to find this area here for a higher low, that's going to be my second level of entry. Or I can just put in a second or third level down here. You know, I'm not trying to call the bottom. I just think that if we have gold as a really good alternative asset and all of a sudden our central banks are going to pivot to like lots of manipulation, more accommodation, do whatever they can to just fill this punch bowl with liquidity, I think gold is going to be a good turnaround story because all of the mania has cooled off. I mean, gold was like the hottest thing ever in the fall of last year and into January before we peaked. And then it was all about AI. Well, AI looks a bit more questionable. It's like I just think gold has a decent narrative. So no, I'm just gonna buy the shares. I was gonna do a zebra, like I was going out to like, December 2027, do a zebra trade. It's gonna cost like $3,000. That's still time sensitive. And if I get into that trade based on this price, I mean, where I'd be more interested in a zebra trade would be if we hit this pullback or this pullback, then looking at the trade that is more option based because I think I'd get a better head start on direction. So that way, if I just buy the shares, I just have it. All it is it's a dollar cost, and if it goes against me, it's a minor drawdown. If it goes my way, I'm looking at 30+% to the upside. Okay, so I'm gonna buy. Okay, filled there. All right, a couple more counts. We'll get back to it. No, I don't. Jay just asked about stop losses. No, I'm going to dollar cost average into GDX. I'm not worried about a stop loss. I think gold is a decent enough story. I want to have it in my portfolio. It's an accumulation thing for me. All right, one more. Because I'm already in GLD. I've been dollar cost averaging to GLD since the top in January. So GDX is a bit more juice. Miners, I think, have a lot more to go as far as like the catch up trade. And it's also a lot cheaper to buy. I mean, an $89 ETF versus a $400 ETF is a big difference, right? I mean, obviously it's a percentage game, but like if I want to do more option trading, GDX is going to be a little more cost effective. But I accept there's a lot more volatility there. So right now, it just I'll do option trades. I mean, if we're back, let's say we do this. I'm just repeating myself, but if we come back here to retest, I may look at a zebra. Okay. And that is I'm buying a deep in the money call and I'm selling an at the money call. So I buy two, sell one, and it basically gives me a synthetic option where I have defined risk. I have a long call and my break even is just a little bit higher than price, but it runs similar to having 100 shares. And can do it for a capped risk. You can do it for also a fraction of the overall cost of buying like 100 plus shares. So it's like having 100 shares for a fraction of the cost. But I want to get that at a better price, not just chasing this thing to the upside. All right, one more here. Okay. All right. So we're filled. That's good. All right. So let me draw this up a little bit. Something like that. And I'll look for a sliver to buy in here and down at these lows. So I already have, if I go through, go GDX, go. All right. What I was going to show you is this. So if I go through, like, what's all the gold exposure that I have? Well, the gold's been beat down all year long. And so just take a look at this, like P&L year to date. Everything is red because I've just been sitting in this accumulation phase of gold. So CEF, I've got open P&L, but year to date, because I'm in dollar cost averaging into it, I'm down $1,300. These all have the potential to pay like 30, 40, 50 plus percent or more. So CEF is one. I've already been cost averaging into that one. GDX, I just added. So GDX, I have some. I've got some options, right? This is for Project Options Edge. I did a ratio spread here. We're already up 70% of that profit, but obviously I want more like directional exposure now, so I'm buying the shares. GLD have shares. I want to add more to it. I probably will add more to it. But look at my GLD. I'm down $22,000. Okay, because I've been accumulating. Now this is hopefully going to be 100 grand or more. That's the idea. Like a decent turnaround story, gold hitting all-time highs. This becomes a huge win. So I will continue to dollar cost average into GLD. I still have pending orders at other lows, but now that we've kind of carved out a bit more of a low, I'll start looking to sprinkle in some more trades. In addition to that, I have lots of option trades on GLD, and it's up 40%. There's still a lot more profits to go here on ratio spreads, bull call spreads, naked puts, 1-1-1s. Like that's a lot. So looking to build out as strong of a position I can there on GLD. PHYS is another one. All shares. It's almost back to break even. And this one hopefully has room to run to 10, 15, 20K. SLV. I'm down $32,000. Accumulation. So, I mean, even if my gold and silver trades get back to break even, that's adding 50K to my bottom line just to get back to break even, let alone the profit that I'm forecasting, which is if gold and silver hit all-time highs again, doesn't have to be anytime soon. I'm like, but if they do, there's, 50K to get to break even, but in the profits that I'm looking for, it's probably going to add another $200,000 to my portfolio. So this whole year, as this peaked, I've just been patient, and I feel, look, I'm grateful that the market has given us a pullback like this, as opposed to the hardest ones are this crazy rip crash and it goes right back up. So the fact that we had this crazy run after like this 4-year bull market and we spent just time consolidating and pulling back, that to me is it's a really good way to accumulate. So I was dollar cost averaging, dollar cost averaging, dollar cost averaging, dollar cost averaging. Now they're starting to turn. If we clear this level, I'm plugging in some holes. That's 50K right there. We get up to these highs, I'm probably doubling that, if not more. So I'm kind of excited. I think it's a good way to continue to add any type of accumulation if you like gold and silver. And what's my target? The highs. Like I don't know how long it takes to get here. I really don't care. But do I think that is a realistic target? Yes. On GLD, do I think that this is a realistic target? Yes. Is it now? Well, probably not. If we have a move up to resistance, I'm not going to get super excited and crazy committed. It's like I've already got trades in. I'm still waiting. Okay, what about CEF? If this thing goes back to highs, that's a 41% gain. If we go PHYS, we get back to highs. 28% gain. Silver, if we get back to highs, a 91% gain. Right? So, 30% on the low end, up to 90% on silver for the high end. Like that's a pretty good chunk. I don't have a lot of indexes I get excited for like that. I don't have individual stocks that I'm getting excited for like that. Not right now. I feel like if you didn't chase AI in April, you had no chance to really make money this year. The pump we saw last week from Wednesday's low to now, what was that? Did you chase any stocks there? The reason I'm sitting up to fresh year-to-date highs is because I had trades sitting. Project Options Edge. And all of a sudden, the VIX went lower. Our expirations they get further out of the money. The strikes get further out of the money, which increases our probability, which lets the broker pay us a little bit more. So that's what I'm doing. All right. You mentioned if you think on a bigger pullback, we'd see higher low, still potential, go 6 handle. 6 handle, that you're talking like 600%? What's a 6 handle? Like 6,000? I don't know, dude. Just clarify what's a six handle from you? Is it 6,000? Is it 600%? Is it 60 bucks? 60 bucks? I'd love to get to 60 bucks. I'd still buy it. So realistically, with the chunk that I just took in, and I'm clearly already down like a dollar. Okay, fine. I wanted to get my foot in the water. That's it. So if we go down to the 60s, like this is one, I would happily take a second chunk there. I mean, so I buy some more, and then I wait because then my break even is going to be right around here. And if it gets back to those highs ever, we'll be okay. Am I in? Yes. I'm in everything against the Swiss except for the Swiss yen. So Aussie Swiss, still long. CAD Swiss, still long. For the first time in a while, this has started to cooperate. So I'm looking at this little pocket area, this previous level. On the right hand side of the trend line, if we carve out a low, I'm just going to measure the move. So that measure move to this area. That's where I'm looking to go CAD Swiss long and stay there. So basically, there's a low to high. And I'll see if that breakout is accurate from a symmetry standpoint. So like a 6,000 to 6,100. Yeah, I think 6,000 is fair. I mean, this low is like just over 6,000. So something like that. Euro Swiss cooperating better. In between these two big moving averages. I'd love to see this one in this open space kind of get back into this area, come back to this high. I'd love to see this one get closer. I mean, parity seems doable, but it just seems like a long ways away. So if we're in wave 3 right now, like 1, 2, 3, I still expect a 4 and a 5. If we get a fifth wave, I'll consider taking some profit there. Pound Swiss, I've been long since 107 and 105. This low is 103. So this one's doing pretty well. If this is a wave 3, 4, and 5, so wave 1, 2, 3, there's a little pause and pullback for 4. Fifth wave, probably good enough to come back into this area and take some profit. Maybe like the 112, 113. And realistically, I mean, if you're willing to hang on to the noise, I think this one may also come back to like 115, 116, and just come back and test these highs. So the only crappy part about pound Swiss is it's just the margin's so expensive. I think it's still more expensive. The New Zealand Swiss looking better. Same thing. If this is wave 1, 2, 3, pullback 4, looking for 5. Previous support over here. I'd like to get this back to between about 4,900 and 5,000. Still want to hang on to it longer. Dollar Swiss is a bit messier, but I still think it's the same story. Crazy lows. Can the dollar Swiss get back into this area around 8,400? Does it come back to this level, which was fantastic resistance around 9,200? If this is a head and shoulders, this is your neckline break. I'm looking for this to finish that move at 8,450. If we stay, here's the deal. If we get above 8,450, I think we're heading towards 9,200. If we reject, I still like buying. I don't know. I'll assess the P&L. I've been in these trades for over 2 years. So if I'm up, I mean, my goal with this Swiss stuff was to try to double my portfolio. Like this is like one of the biggest commitments I took in my forex accounts is putting maybe 10 to 15% allocation in my entire forex account and trying to double that or more. So if I can turn let's just say $100,000 account, if I can turn like a $20,000 position into $40,000, $50,000 in profit, that's pretty good. Make 40, 50%. It's taken a couple of years, but I think that's a pretty fair way to grow it. Patience, yes, but man, hopefully it pays out. Okay, we still in Gilead, yes. As long as it stays above 133, son of a biscuit. I mean, if it stays above 132, we're looking fine for the day. It just needs to stay above 132. If it's in the 131s, our break-even price is 131.50. So GILD, it's still profitable. We're up 62%. If you want to take it, you want to take the profit, close it out, protect it, that's fine. We're trading at 132.47. I mean, if we drop another dollar, I'm at break even. If we stay above 132, I'm up, $100. Like, the safe trade is just take the profit and take the winner. Truly. I mean, if you look at the expected move for today, we could hit 130. We could take profit back, which I don't really want, So let's see if there's any. Let me see where the gamma sits on this one. If it'll pop up. Let's go Gilead. We're trading at one. Jesus, this isn't doing anything today. No Gilead. Fudge. Let me try this. Let's try. I mean, it's a toss-up. 134 to 130 are the levels. I mean, this is somewhat encouraging. Call side has a little bit more control. I mean, I need to stay above this level. We stay above 132, we're in good shape for full profit. We stay above 131.50. But like I said, if you want to protect it, it's up 60%. I mean, you're going after 100%. That's the max, right? We got in 50 cents to make 50 cents. But if you want to protect it, have something to show for it, you can take it now versus holding out for the extra $40. So let me see if I can maybe I can get like a bonus fill here and maybe make a few extra cents. So right now, 80 cents credit. Can I get like 85 cents? Maybe they'll give me a positive fill here. Of course they won't. 85 cents. $0.82. All right. I'll try 80 cents. Just take the winner. Come on. Liquidity. 79 is not filling. All right. Well, F it. I'm going to take the chance. I'm just going to see if it'll stay above 132 for the day. If you want to take the profit, let me know where you get filled at. I tried 80 cents right now, which is the mid price. It didn't fill. So I'm going to hang in there and see if I can just get the full profit above 132 today. All right, let's have a look at SPX again. Looks like price isn't doing much for a non-farm payroll day, which means pretty sloppy, choppy price action. We're at 40. Do we get some? I mean, look at this thing. This is all day yesterday too, by the way. All day yesterday, even to today, overnights. I mean, just a lot of noise. So should I put a butterfly in here? I mean, if it's low risk. I mean, HVL's down here at 77.15. Do we just hang out and go nowhere today? Hmm. $41. Yeah, Swiss pair. I'm in a hold no Swisses. It's been positive swap, which doesn't suck as a currency trader. Actually, getting paid like 3-4% on holding positions feels a lot different than the negative swap you get for pretty much everything else. That's part of the reason I built that trade out. And since we had the turn of positive swap again in 2023, I've literally been holding a lot of those trades since 2023. So yeah, we're creeping up 3+ years on Swiss pairs. It's been just a dollar cost averaging journey. But they're starting to look right side up. They're starting to get the pip appreciation that I wanted, in addition to the positive swap, which is good. Let me make sure I'm not missing any comments here. Okay. So let's see where we go for the remainder of the day. We're at 42. I mean, there does seem to be a lot of noise between 7750 and 7700. It's I mean, it's close to making me want to try to pin 7750. It's close, but all it takes is, one rejection. It's like, well, because right now we're trading 8 points away from it. It's going to be a pretty pricey butterfly. So I'll probably just hold off on that right now. I mean, I still think up here, the market, if we're going to make a directional push, that market may make a directional push up towards, 77, 75-ish. That's towards the higher end of these expected moves. I mean, all three of these, by the way. So the pre-market prep, the smart range prep, like they could get to 75 or so. I don't think that's enough direction for us to get filled on a daily profit play, but that might be enough to give us a, what is our like debit risk? Didn't draw that very well. Our maybe our butterfly trade. Like if we get up to 75, that might start filling up that butterfly a little bit. It's kicking in at 77.90. So we might be able to pull a couple profits there. Might. So we'll see. Otherwise, like, and this is why I just go back to the lesson from Monday, Tuesday. This is why Monday, Tuesday, this happens. This was a really big surprise to see it happen just because we rarely see consecutive days like just blowing out the expected moves. But it's not a surprise that after this type of like delta hedging that dealers would have to do, that they have tightened the living snot out of the market for these last 3 days. Right? Like this right now is just little to no movement. And why? Because how we got there, how things tighten up, that's still dealer making 101, market making 101. Like they can let volatility expand. They can have an occasional like roll, and we just saw that happen on Monday, Tuesday. So anyway, we'll watch. Let me go to, I'm going to put GILD on this other screen. We're at 132.48 right now. Come on, 133 and 134. Get up there. Let's see if we can get a winner. So hopefully we can sneak in a winner on Gilead. SpaceX should be a full winner today. Nice recovery, honestly. I mean, let's see if SpaceX gets some legs. Apple, can we get up on Apple? We're at 313. Can we get a push to like 315, 316? Maybe it reduces a little bit. Procter Gamble, I think we closed that one down for break even. Yeah, we were break even on that one. We were down originally, but it came back to like a break even trade. And then Microsoft's going to be a loss. That one's not returning down. Amazon, we took a nice win on. Apple, a nice win on last week. So we're grinding through some earnings. Let me check on SMH. So I did some. I mean, this week for Project Options Edge, we had some action this week. Put this here. So Project Options Edge added a trade this week on GDX. Added a trade on DIS or Disney. Added a trade on Tesla. Added a trade on SMH. Looking to protect some profit today. If I get some of those, anything over like 90+%, I'm probably taking those off the table. I'll take the profit, get the buying power back, have some more dry cash or dry powder. So Marvell, CVX, Microsoft, XLE, XOM, AVGO, SPY, I'm probably going to hang on to a little bit longer because I think it's like 80 something percent, but I'd maybe creep it up to 90 plus. Generac and Micron, all looking pretty good with like 80+% max profit. I like those 85s to 90s. So not too shabby. Anything else? Hanging in there? We're doing all right? Okay. Gosh darn it. I'm watching Gilead over here, just pissing me off. $60 now, $30. Benny says, where are those trades posted? I just mentioned the service. Project Options Edge, a lot of those trades are posted. DRAM, it's a 36 by 30 ratio spread. This one is, it just needs time. I mean, DRAM and MMTUM, I did some of those trades here. I mean, they just need time. Yeah. So I did a ratio spread. Look, the AI stuff to me is I think it's going to be just insanely noisy. So, I mean, in your opinion, what do you think is the overall AI narrative? Are we like gangbusters, all in? This is the best thing ever. Everyone's all excited and optimistic about it, or are we, on a razor's edge of spending too much money, overspending, overcommitting to this build out that's going to take all these casualties, break everyone's bank? It's higher borrowing costs. It's circular financing, and what? To replace a bunch of jobs and have a boom in productivity and corporate profits while everyone just gets freaking left behind. Like, that's the weird dichotomy of AI. It's like, what is it? Is it the greatest technological innovation ever that's going to help the world? Or is it just a weird, unethical, like, profit grab that's still benefiting the largest, most profitable companies in the world? I don't know yet. So I'm going to keep some dry powder, see if I can, uh, find out better opportunities. I think the chase was exciting. It made everyone feel like an idiot in April, May. If you weren't chasing AI, if you weren't Leopold Aschenbrenner, I mean, look what happened. The Kospi had a 50+% pullback. SK Hynix, like all those crazy high flyers, they've all had nasty pullbacks. Doesn't mean they can't stabilize. Doesn't mean a bid's not there, but it's a tough commitment to me. Rob says, is Project Options Edge a new program or open? I mean, it's open. If you want it, it's open. It's always been, I've never had a standalone, Project Options Edge webinar. But what I did recently is in my Diamond Club offer, I included Project Options Edge as one of the big bonuses, because a la carte, Project Options Edge by itself is like $4,000 or $5,000. You have to talk to a sales team member. It's request only. I don't promote this. Okay. But just recently, as a Diamond member, it's been included. And now that's, part of the presentation is okay. Project Options Edge. It's very much how I manage a lot of my portfolios. So it's a little bit more cash intense. There's always a game plan. You're gonna use capital. Like I end up tying up usually like a couple $1,000s or more on every trade in Project Options Edge. Usually it's a ratio spread or cash secured put, or it's on margin. And I trade a lot. It's to me like it's reliable income with a plan A, plan B, and plan C. I'll repair a lot of trades. We do take stops occasionally, but our win rate is 98%. And we just keep having more trades like lop off for full profits. Okay. Yep. So it's in there. It's by request. I mean, if you want to talk to the team and just ask only about Project Options Edge, that's fine. Call the team. 904-706-3537 or email them. support@prosperitypub.com. So they'll help you out. Okay. If I've got anybody that's new here that's looking for some, free trade foundational stuff, prerequisite stuff, One Trade Mastery, Options Whiteboard, Trading 101 videos, Anatomy of a Trade, Strategy, whatever it is. Like, I mean, I've got like 100+ videos on my YouTube channel that's just education. So if you're coming into these sessions with me and you're like, all this guy talks about is options. Well, I've got like 20 videos that are just options to help get you. And it's not complicated stuff. This is why I built an entire course called Practical Options. The way I learned how to trade options, I learned how to trade them on a chart. Okay. Yes, you trade an option chain, but I learned how to trade them on a chart, meaning this. What do you want to do with SMH? Do you want to go long? Do you want to go short? Do you think that we're going to stay inside a range? Do you not know which direction? You just want to trade it where I just have a dead zone here. As long as it goes up or down, I still get paid. What are the possible scenarios? Price either goes up, it goes down, it goes sideways, right? Guess what we can do with options? We can literally take any of those scenarios and make money. That's trading options. So if you can think about it on a chart and you can think of a game plan, you can trade options. And the reason I like options so much is because if I am dead wrong, I know exactly what I'm risking. If I'm right, I know exactly what my profit is. And I just take lots and lots and lots of trades. So to me, like options is about taking good calculated bets, base hits, base hits, base hits, and add them up. On the occasional trade, yes, I get the big runners and call options can, increase your gains, and that's great. But I've got to love something to buy call options. I've got to, hate something or think it's going to go to zero essentially to buy a put option. I don't typically trade just straight up directional options. So like I said, I learned how to trade from the chart side, which is if I can think of the trade technically, then I'll put it into an option trade. And that has helped me be a much better risk manager and a consistent trader. Okay. Thanks, Eric. Appreciate that, man. SanDisk PE of 6, market saying earnings aren't sustainable. Yeah, we had earnings on these this week, right? So SanDisk, and this is why I didn't want to chase this stuff, right? Because do I think there's a bid down here? Sure. But where? Probably here. Right? And if there's not a bid, I mean, one thing I'm also wondering is see how this hit the 70%? Okay. This 70% might be a very important line in the sand because this might be rally, 70%, rally, lower high, or I'm sorry, higher lows and lower highs. Like this might just form a big wedge. And all this chase in AI is going to be met with no direction. So what I could do on SanDisk, even though this is a ridiculously expensive stock, is could I take this down here and say that SanDisk will not take out these lows? Because look, if we take out this low, I think this market is going to absolutely dump these AI hyper movers. Like it's just going to be like, get out, get out, get out. Like that's not a good sign. But if it stays bid, I mean, something defined risk there wouldn't be the end of the world. If I'm right, make sure we're not losing a bunch there. Option trades, we can do defined risk. But I don't want to take on the heat. And so if I'm going to take on more premium going all the way out here and saying, you know what, we should maybe hold that 600 handle. WDCS book contracts is 2031. Yeah, a lot of these are like demand is out to like computing demand is like already built out to like 2027. Same thing with Western Digital. I mean, yeah. So if I'm taking a trade in this one, here's what I'm gonna look at. 250. Can we stay above like 250 by the end of the year? SanDisk. And this would be like project options as worthy. SanDisk. Could I take a trade here at 562? Something like that. I mean, I might want to go lower, like maybe 400. I mean, this is a runner since like early 2026. I mean, how crappy would it be to have January 2026? This stock is up a ridiculous amount, and it just spends the entire year giving it all back, right? I mean, I don't know. Or it does catch a bid in here, and it's like, oh, these are fantastic stocks. Is it? Is it a great stock? I don't know. I mean, I joke about it, but I'm like, all I knew SanDisk from was a little tiny SD card you put in your digital camera. That was SanDisk to me. Not a stock that's going to go up. What was that up? This was like the best performing stock of the entire year, up 924%. That's crazy. So does it spend the entire year giving it all back? Well, let's see what the premiums look like at 250. And let's see what it looks like from a snowflake analysis standpoint. Let's go to SanDisk. Fair value 914. I mean, looks okay. Super volatile, yes. Price to earnings 16 times. It's pretty low actually, but overvalued, so it says. But if I'm putting in a ratio spread at, 560 or 270, is there premium there? Let's go out to January. I mean, look at these freaking premiums, man. This is still pretty impressive. I mean, I'm going down to like a 3 delta for God's sakes. So SanDisk at let's just say that the let's just say $500 at $500. Okay, so I can put in a naked put and get $2,300 on this if it stays above 500 by the end of the year. That is about an 85% chance of profit. The Ivy rank has gone from 90 down to 41. If we have a volatility flare up, this Ivy rank is going to go bananas to the upside, which is part of the risk. Okay, because right now it's like, oh, it looks like a good spot. Price action has slowed down. Ivy rank has compressed so much more than what it was. These were all like 90 plus Ivy ranks. Now they've come down a ton. So if there's additional volatility for the second half of the year, I mean, that's a risky trade, truly. But I mean, this trade for an 88% chance of profit with a break-even price around 435. If we go from all-time highs, 435 puts me at an 81.5% pullback. Do you think I could survive the trade? I mean, I would hope so. If there's a bid in here and demand is insatiable, like I would hope there's a trade there. Probability-wise, the options market says, 88% chance of profit. If this Ivy rank was higher, I'd kind of love this trade. I think there is some risk here. But do I think I could repair it? Yeah, I do. I think I could repair this trade. So, I mean, going out for the rest of the year into January, I mean, it's not awful. If I want to say, give me $1,000, I do this. I get shit. I just got filled in Gilead for 80 cents. What's it at? It's up to 133. Gosh darn it, dude. I forgot I left that take profit in there. Gilead's going up to 133 and change. I should have just not touched it. I mean, if you want to hold Gilead, it's probably going to stay above 132. Get your full profit today. I'll let the second contract run for the full profit. Gilead's up to 133.39. It's up to fresh highs today. I think it's going to stay above 132. I'm going to roll the dice with that second contract. All right, back to this. A $70 profit trap. Let me build this one out. I kind of like this trade. I'm going to take this trade I think I'm going to take this for my Project Options Edge. So let's go SanDisk. Out to January. 570 by 500. Okay, this does take some capital, but this is the trade. As long as price does not drop all the way down to $420, I can hang in there and grab about $1,100 profit. Across the board in all my portfolio margin accounts, that's probably going to be close to like 15 grand. Okay, fine. It moves the needle. Do I need to sit on it for some time? Yes. Is there some volatility attached to it? Yes. Is there an uncertainty to it? Yes. Is there risk in the trade? Yes. But it's been one of the better winners for the first half of the year. I'd like to think that the market's not going to let it just fall to become, it's going to pull back 81%. I mean, it could. But I'm wondering if there's a bid in there somewhere around that like 50% zone. It's already pulled back 50 plus percent. So even if the market is just going to be bid and wild and crazy, I mean, something like that, maybe it goes back up, makes this trade even better. So is there risk in the trade? Yes. So this is going to be taken on my portfolio margin accounts because if I get assigned the shares, it's going to be way down here. And I'll use a covered call to repair it. So this lowers the delta. I mean, I can make a lot more money like this. It's like, well, now it's worth $2,000, but now my delta is way higher, and this is a much less profit trap. At least with this trade, 70 wide. If I pull in over $100 or $1,100, if I build this thing out, look at the options graph. Let's say that by here's let's say we get through September. Okay, so we get through September, we're into October now. If we're hanging out around the same price in October, this trade is worth like $800 to $900. So I don't have to sit on this trade all the way to January. Okay, if price comes way down here to $500, then yeah, I'm going to take on some risk. I'll be down a couple $1,000. It's undefined risk for that ratio spread, but that's also an 80% correction from all-time highs. So we will see what it does. But as time passes, it starts to fill up that tail credit, which is what I want. And if price, does make a move lower, by the time we get into December, I'm going to start seeing some profit trap filling up, which can make things very interesting. Look at that profit trap. So by the middle to late December, anything in like this, the 800s, 700s, 600s, I actually see double the profit. Double the profit. And it has a $7,000 profit trap opportunity if somehow we're hanging out around like $500 on the nose. That's at expiration, but even coming in those final couple of days, how nice would this be to have maybe SanDisk drop to $500 into the beginning of the year? Because if it did that in the beginning of January, I would not be upset at maybe closing out for like $2,200 profit. So anyway, I'll take the trade. I think it's an attractive one for portfolio margin. Let me see if I can sneak in a little bit more premium. I'll try $12. I'm going to go every, let's try like every 15 cents. It's probably going to take it down towards the mid price, to be honest, but I'll, a guy can dream, right? 11.55. I want to see where I get filled at, and then I'll throw the trades in for my other portfolio margin accounts. 11.40. Okay, just filled for 11.40. So 35 cents more than what it was showing on the mid price. 11.40. Okay, what did that tie up, by the way? Buying power is 14.81 for portfolio margin. Okay, standard margin ties up 87. That's a little frothy. So I'm going to go portfolio margin only. Interesting. Took it down to 11.30. $11.38. Okay, 11.32 is my lowest fill. So let's just say 11.30. 1, 2, 3, 4, 5, 6, 7, 8 times 8. There's $9,000. If I can somehow land this thing in a profit trap, even for a partial profit trap, this could be, $15,000 to $20,000. So we'll see. Anyway, so Project Options Edge, new trade. Double check your buying power, though. This one's a little bit expensive. I'm still going to have the same game plan. Know the break even. This is going to be trade number 187. SanDisk, 115 expiration, 570, 500, 1132 to 1140 credit. Riskier trade in the AI space, but if assigned, the break-even price is, so we would do 500 minus 70 minus 1132, so 418.68. Okay, but the goal is I would take that allocation if I'm assigned, break even at 418.68, add a covered call, repair it for 500 to 1,000 bucks. I mean, if you look at this option chain, let's say we get a trade and we're somewhat at the money. So let's say we get assigned, and that's going to suck. Like, oh crap, I'm buying 100 shares of SanDisk at $438 or $418. Like, that's pricey. But if I went out a week and I get an at the money covered call, like, this is insane, man. You can get $6,000 or $7,000 for a covered call for a week. So do I think I could repair this trade? Yes. And I would even trade like in the money covered calls if possible. And just make sure, like, I know my break even, selling in the money covered call, like, just try to flip this thing for like $1,000. The initial trade is I want to make $1,100 on the trade. So if I sell a covered call, get that premium, lower the cost basis, just get me out. I think we could repair it for $1,000. So it's that type of like full-fledged planning that gets us through a project options edge trade where I don't take a lot of losses in that because I manage from like start to finish. So I have a trade, that's going to be income side. If that trade is in trouble, I have the ratio spread, which gives me potentially a 70-point buffer. If that buffer doesn't work, I take assignment, I repair it with a crazy high premium covered call. If that doesn't work, I'll do more covered calls. I'll add a collar trade. I then have it become like a campaign trade, and I will work through it until it becomes a profitable position. So that's another thing with owning stock and trading options is you can build trades into profit. So plan 1 is take profit on the income trade. Plan 2 is have that buffer, have that ratio spread, maybe offer bonus profit. Plan 3 is take the assignment, repair it with a covered call. Plan 4, if I want more downside protection, take a collar trade, ride that mofo down if it goes down, have downside protection. But I think we can repair it. The reality is this trade is probably sitting at a decent win percentage, like, yeah, roughly 90%. That's fine. Okay. Do I think it could be better? I mean, I'd love it to be like 95%, but we'll see. So, do I think the market's going to absolutely abandon the AI trade? Probably not. But could it? Of course it could. But what does that mean for the broader market? If we abandon AI, it's been the only real sign of growth this year. Our GDP is up because of AI. Our buildings, our jobs, our data center, like that's all because of AI. So unless the whole world's going to be like, no, this is a terrible idea, I don't think we can do that. I think we're in too deep. I think we are I don't know, we're committed. So, and it's just one stock. It's like, so I take one on SanDisk and I focus on this one. Do I want to put this elsewhere and have this type of exposure on a Western Digital and a Micron and SMH in general and SOXX, or no? Like one stock's fine. Okay. Anyway. All right. You got that trade in for Project Options Edge. I'll add it in the tracker. Okay. On a positive note, I think, let me double check something here. Downloads. me see where I was at for May. I've got May 6th. Okay, I was looking at my year-to-date highs. So we're right back to them, which is good. And still building out a decent amount of time decay to go with it. So let's see where we are at. Good Lord, dude. This market has done jack squat today. Well, so the good and the bad. If I throw in a butterfly spread at 77.50, it looks attractive enough. Get rid of my freaking. It's at 95 million. I mean, I think we could get stickier here. I just know that because we're trading at 77.45, if there's too much like drifting upside, I mean, I could see that we fill up a little bit more at like 75. Maybe we still settle at 77.50, but right now that trade is going to be the most expensive butterfly that I put on because it's right at the money. So, I mean, it's an okay trade. I don't think I'm going to get enough premium necessarily to. Let me see how I can build this out. I might just put on like an iron fly. We'll try something here before I go. Let's try SPX. So 77.50. Do I think that we stay in this range today? I mean, this is a 1-to-1. Maybe this is cheaper on XSP. I'll try a 1-to-1 on XSP. This is one way to get a pin. So we can try a pin here. That's 245. I can tighten this up, maybe go 4 wide, 4 wide. So that's about a 1-to-1. Price would have to stay below 2. I'm going to try this trade. I'm going to get this trade in for, let's go 5 wide. 5 wide and give me $4. So 5 wide, give me $4. I'm going to put this one in for double ups. $100 risk for $4 profit. That gives me a break even of 779 or lower and 771 or higher. The trade's not filled yet. We're trading at 220. I can only take the trade now for, it's just over 1-to-1. That's okay. But I'd rather turn this into a low risk, high reward and see if this will actually fill. If it doesn't fill, that's fine. I don't think there's a reason to force a trade. You know, we fought our oh, fucking Gilead, dude, up to almost $134 now. Look at this piece of shit. So the good thing is I got another contract running, so I'll make full profit there, but I forgot to close out that one. I put in a pending close at 80 cents and it filled. So that's my bad. But anyway, hang on to it. You'll have a full 100% winner today in Gilead. Good stuff. Rackley, send him my email. chrispulverpub@gmail.com. Be wet. I mean, what's the timeline on that, Pete? Is it a swing trade? Is it bigger picture? Or how long is that trade going out? All right, I'm going to put this trade in for double ups. So we'll try this bad boy. Double ups. Eight, 7 expiration. Seven, 8, 0. 775. 770. Okay, pending. Swing trade opening on Hormuz should see tanker rates crater. Oh, gotcha. Interesting play. Yeah. So is it an inverse play, or is it a put option? And again, like you said, lower liquidity, so it's kind of an all or nothing. I mean, the real challenge is like getting out of that thing where you want to, if you see some good profit. Yeah, put spread. Okay, fair. That's fair. All right, here we go. Now we're getting some activity. 50 bucks. Let's see. Let's see if this thing can drift. If we can drift up to like 75-ish, I mean, there's a gamma up here at 75. There is a lot of action at 78. I mean, I know that's beyond the expected move, but that is also my big fat profit trap. So let's see if we can get something like that to land. All right, I'm going to. This is a broken wing calls and broken wing puts. So this is the $40 donation that I was given to the market to see if I could land a profit trap in that like 7,800 zone or 7,600 zone. Most likely at this point, if the market drifts higher, I'd love to see a run towards 78. See if we can turn this into a couple $100 profit. Pending order on XSP flashpoint. Again, there's no real pain on the day. I'll put the flashpoint in, but we'd have to see prices falling for flashpoint to get filled. So unless we come back and fill this gap today, keep an eye on it. So up here towards, I'm just going to set a chart alarm up here towards like 90. So, I mean, 77.50, I do like it. If you want the 1-to-1, I mean, this is just like, you know what? It's going to be a pin price on XSP. It could, I mean, you can trade it a little bit cheaper here as well. Let me go to SPX. So it's a play. It's cheaper on XSP, but if I tighten this up, 50. Let's go maybe to like 75.25. I mean, it's 2-to-1. Tighten it up. Now we're 20 and 20. $500 risk. Tighten this up even more. 15 wide. I mean, if we think that 77.50 is a good pin price today, you're risking $300 to find out. Is it a great trade? I mean, it's one of the better candidates for a pin price. Could it drift today and not finish at 77.50? Sure. So it's like, I don't think this is the call. And also I hate taking butterflies at the money. Iron butterfly, it's like I hate it because it's not cheap. And it's going to take the remainder of the day to see if I'm right. So if anything starts to look more attractive up to 77.75 or higher, I'm just taking an expensive butterfly spread. But nothing else looks good. This is like the only game in town. It's like, well, right now we're at 100 million on 77.50. It looks pinnable, but it has to hang out and just stick here. I'll just type it in. Chris Pulver pub at gmail.com. All right. So I'm not going to force a trade. Even that one here, it's like it's pseudo attractive. It's a $300 risk. It's only 15 wide. I do think that I'm served better with 20 wide butterflies. They tend to treat me better. You get more profit. Obviously 20 wide, but it's costlier, right? This is $550 versus $310. So if I feel like there's more precision to be had later in the day, I might still do a 10 or 15 wide. Okay, but for right now, I'll just chill. Let's see the day unpacks. We'll just hang out. So XSP, if we get that double up fill, we'll take a low risk trade. We've got a couple of broken wing butterflies out there to maybe get some profit traps if price move. If it's another just absolutely choppy day, then I'm probably going to look for a butterfly and maybe try to get a pin. But that's about it. So, all right, I'll wrap it up just after 11. We'll wrap it up here. I'm going to start managing some of those profits on Project Options Edge. I think we have 7 or 8 positions that are all like 90+% profit. I'm going to take some of that buying power back and get a lot of time back, which is nice. Fresh little trade on GDX today, just dollar cost averaging in. Gold's looking pretty good. I'd like to see gold and silver get those break even. I mean, break even on those positions gets me back $50,000. So, I mean, I was wondering, like, where is my alpha this year? Well, it's just positioning. I mean, if I get 50K back, I'm trying to think for the year, probably close to like 13%, and obviously winning more trades on top of that. But I'm hoping I can push this year to like 20+%, even though it's been a challenging way to get there. I mean, because I didn't chase all the freaking AI stuff. I wasn't balls deep in AI, call options. I wasn't I didn't take a page out of Leopold's book. All right, Pete, you're pushing that pretty hard, huh? Hope it works, man. Oracle's an interesting game using those prediction markets, but it's cool. All right, I'll let you go. We should see a full winner on Gilead today, so I'll let that remaining contract run. We should see. I mean, is Apple able to creep up towards? It's at 314. It's a maybe. I mean, it's going to still take a couple dollars on Apple to get there, but I'll at least hang on to it. Apple for today. Yeah, I mean, I don't know. We'd have to get past this remaining expected move, which may or may not be the case, but it is what it is. Okay, I'll let you go. Diamond Club members, come back and see me this afternoon. I have a couple of other sessions. I'm doing 11:30. I've got another meeting, 12:30 live session. I think we have our session scheduled today at 1 p.m. or 1:30 p.m. Let me double check, because I know there's a bunch of messages that got sent out. They're trying to put Jesus, there's more webinars. You're killing me, Smalls. Let me see what time I scheduled the masterclass for today. Okay, we're going to do 1:30 Diamond Club today. I don't want to change it again. 1:30 Diamond Club today. The team should have sent it out. So Diamond Club here, 1:30 p.m. Eastern time. Sorry, that's chicken scratch. Write it down. Okay, so Diamond Club, 1:30 p.m. Eastern time. We'll go 60 minutes. Okay, and then next week I plan on having a master class. It's a bonus class. I talked about this week. I'm going to try to combine all of my students in daily profit play, all of my students in double ups. We've been doing very well with this combination in 2026. I think we need to bring them all together. Let's bring them together. These are the trades we're the most active with every single day for 0 DTE. Let's figure out, how we can kind of it's just the combination of like, this is what I do every day. Like the most success I've had with 0 DT trading is this combination. So we're going to bring them together and have a masterclass next week. So Diamond Club today, daily profit play and double ups next week. It'll be a combined masterclass. We'll have some more newsbreakers trades next week. Pinch point scanner. It is time. Next week, we will have a watch list Wednesday. I'll probably have a strategy session I can sprinkle in for Pinch Point members. So we can either do a live strategy session, or I'll send out a video update with my trade alerts and update on the tracker. And then we will continue with our, business as usual. Cool. All right. I'll let you go. And we'll talk a little bit. All right. Thanks, everybody.